Hey everybody, David Skarika here. So this Friday I'm doing this. So a couple things happened. Interesting. I don't know if people remember, but like I actually like talking about individual stocks a lot and their earnings and outlooks. But like I know that a lot of my audience are gold and precious metals and hard money people. And like for example, the one I just did on foreign Tesla didn't get that many views, where the videos maybe I'll do on silver or gold, well, you know, sometimes get 300, 400, 500 views. The one I did on Indian stocks, equities, got like I think almost 900 views. And so I was going to talk about 3M, but maybe I'll just pass on that for now. But I did one. Maybe we'll quickly talk about 3M. I'm mostly going to concentrate precious metals. So 3M outstanding earnings. I'm kicking myself because I started talking about 3M and was down to about $90 because the high was over 200, and it went down to 80, and I should have bought it there. I think once you get these large cap stocks down 60%, it's time to start looking at them, and you might not get the low, but you can kind of average in, you know, when they're down that much. And now 3M is up 21% today, which, you know, it's a huge company, right? So it's now over 100, you know, $20 a share. Yeah, interesting for 3M. So it just shows you maximum pessimism again. Value investing, it works. You know, that's why I believe in it. You know, etc. So now I'm going to talk about gold and precious metals. Gold had a big whack down on the GDP numbers, and again I've said like when we're looking at 3M, but 3M had numerous bad quarters, so that's kind of an outlier. But when we're looking again, like car companies like Tesla and Ford, retail companies like Macy's and Lululemon, all doing very poorly. It just seems to me that we're slowing down, the consumer's slowing down, everything is slowing down. And so, you know, that's why they're going to start cutting rates in September. And so, but this is what I want to talk about gold and silver today. You have to ask yourself, okay, I've been bullish in gold and silver. I didn't think so. I was hoping that silver would hold 30, but here we're back below 28. So the life of a silver bull, right? It's never fun. So, but actually interesting enough, the silver equities are holding up very, very well. EXK, some of the others I own, very, very well. Very happy with that. So maybe that's a sign relative strength is starting to happen, and silver will just pop right back. Remember, $28, $29 silver, these companies can definitely make money. So gold and silver, when are they going to really move higher? And I think it's very simple. When these interest rate cuts start, you know, okay, they've gone up a bit in anticipation of them. I think the issues with debt have also helped gold and silver. You know, I think you got some fundamental buying coming in there because the U.S. supposedly got to roll over another $9 trillion within the next year, which is a record, plus the other $2+ trillion they'll issue. So you're talking $11, $12 trillion worth of debt hitting the market here, you know, and it's going to be much higher interest rates than what a lot of this debt was issued at, you know, originally. So I think gold and silver are anticipating that, and I think they're also anticipating it doesn't matter who wins the election, either side is not going to stop taxing and spending. You know, so anyhow, yeah, that's gold and silver, you know, and so that's why you're going higher. But I think interest rate cuts are always a catalyst, because then all of a sudden, you know, a lot of the type of people who maybe were conservative would buy fixed income would also buy gold and silver, and your opportunity cost kind of goes down to own gold and silver because you're getting less interest on your investments. And then usually interest rate cuts happen, you know, in a recession or weakening economy, during a bear market, and people are still kind of conservative in the mentality if they've lost money, and that's kind of the first sector they get into. And if you go look at, and I'm going to do a detailed video for subscribers this weekend on it, you go look at 2001 or 2009, 2008, 2009, or even 2020, the first, you know, whatever, 3, 6, 9, 12 months of the bull markets, even 24 months, up to 24 months, gold and silver kind of lead the charge. In 2001, gold and silver skyrocketed into 2003 when, you know, the equities were still in bear markets. So I think, in a nutshell, that's what we need. We need an interest rate cut to start. And even in 1995, when we didn't have a bear market, I mean, the interest rate cuts kind of launched that massive bull market of the mid and late 90s. Gold and silver, the XAU rallied 30% in a few months. So that's what I think we really need. We need those interest rate cuts to actually start. And of course, even though this is a seasonally good time usually for gold and silver, we've obviously seen this whack. So it's underperforming a bit seasonally. And of course, remember, September's not far away now. You know, like the next Fed meeting's next month. And then the Fed meeting after that is in mid-September. So you're talking like, we're like 6 weeks away from the first interest rate cut. So that's when I think that's when gold and silver will really start to launch. And even in 2019, gold and silver did very well when they cut a few times. And we were already well out of the bear market by the time the Fed cut. So I think that that's what we really need. We just need interest rates to start going down. And of course, if there is some kind of panic in the markets or real weakening in the economy and they have to cut even more, I think that will really, really launch gold and silver at that point. So, and I'll just show you a little coastline shot here. So yeah, I'm gonna leave it at that, yeah. 6-7 minutes, that's all I wanted to do. So that's what I think gold and silver really, really need. I'll put one example of a chart below. Maybe rather than showing the gold and silver chart now, I think I'll put a, I think I'll put the 2001 example up. I'll show you that. Remember, a bear market wasn't helping gold and silver in 2000. Gold and silver stocks went down until November 2000. They started to perk up December into January. And then basically, like I say, went up for years as soon as those rate cuts started in January 2001. So I'll put that chart up of the HUI in 2001. And that will be our stock chart of the day. So this will be out, I'll probably put this out Sunday morning. And everyone, okay, I guess you have a great weekend. I guess we'll see you this Sunday. Yeah, that's basically it. So I'm very happy today too. One thing, we got on the scale, I broke 190 on the right way, on the downside. First time I've probably done that in maybe, I don't know, 2 to 3 years. So I'm pretty happy about that, you know? So my goal is 185, and I'd be ecstatic about 180. But 185, I'm very happy. I'm 6 foot tall, so I like to get to 185 and then start toning up a bit. Okay, everybody, take care.